Hi and welcome to another video from TCM Education. In this video we want to analyze 4, maybe 5 stocks that were on paper great winners yesterday, and I'm talking about double-digit winners or super important stock that went up anywhere between 5 and 10%. I'm going to stay away from AMD, which we discussed twice in our videos yesterday. So let's start with Echostar. Echostar SATS, we discussed it, and we know that it's up because of super important news. The FCC or Trump requested the FCC to lift the barriers on Echostar without understanding what those barriers are. The stock is up 40% in the pre-market. So it started trading day almost number 1 on a gainers losers list, and you know that something major happened. Now let's take a look at the chart of this stock yesterday, and you can see, guys, let's start with the gap first. Okay, so nothing we can do here about this. Nobody's suggesting trading this stock in the pre-market. It opens up with a huge gap, moves up to 25, pulls back, moves up again to comes down to 24, moves up to 25, fails this breakout at 25, sits there, comes down to 24, and then goes up to 25, pulls back to the view up, closes near the highs of the day. Now, how do you trade? Assuming, of course, you're not in a position overnight, and 99.99999 of day traders don't trade SATS, are not even looking at this stock, and the only reason why we are discussing this stock is because it's on the gainers losers list. So what can we do about it? First of all, in the morning session, what can we observe? Obviously, a trivial trade will be a power move over this 25 level. So what's happening here? The stock moves up 30 cents, immediately turns around, moves down to the view up. Now you're thinking, okay, the view up, let's I'm not sure exactly what is the view up level. Let me check it in a bit. 24, let's call it 2470. So you're thinking about buying it at 2470 and maybe finally reaching for the sky, meaning a dollar move here, which is 4% on a stock that's up already 40% and clearly not moving lower. So can you expect another 10% intraday move? I mean, I don't think it's out of the question. Obviously, it's not moving anymore. So you get 25 cents, and then the stock drops to 24. Now, and again, keep in mind that you need to sometimes to be tenacious, and of course, nothing is a guarantee. But here, at 24, finally, it seems like the stock is basically sitting here 1, 2, 3, 4, 5, 6. Let's call it 20 minutes. Here at the 24 level. Now, again, you need to have the patience and let's call it this way, and the belief that this stock can still deliver an upside move. So if you buy it here at 24 with a limit order or with a market order, and now if you buy it at 24, what is the risk on the trade? Because there's no real, you cannot really assess what is the risk here. You may use this last hold on a second, guys, low here, which was 2386. Though, can you really trust this one spike down? I'm not sure, but you can enter here at 24 and make a 1% or 2% assumption here, which is a reasonable risk. So if you take a $10,000 position, that's $100 of risk. If you take a $100,000 position, the volume is definitely not an issue. You have $1,000 worth of risk.
That's none of the issues, but it's worth, I think, in this case, looking at 1 to 2%. Most of the time I will go for, used to go for a 1% risk reward, 1% risk, and hope for a 5+ reward. In this case, it works. Is it a conventional, trivial trade? Definitely not. But this is definitely a stock that was eventually worth watching. I mean, how many stocks that we're watching are trading up at the open 40 to 45%, and don't ever deliver a good move, either up or down. It hardly ever happens. So this one was a bit tricky. The move from the highs failed. The move from the lows was a success with, in retrospect, very little risk. Can you learn something out of this trade? I think yes. I think you can learn that patience pays eventually, and if it doesn't pay and you take a small loss, that's part of the game of day trading. So if I want to summarize SATS, not very easy to decipher, but clearly a winner on a pullback to the round number. Now let's move to the second stock that I want to talk about. That's a stock that in the past we used to trade, some of us at least, more than today. That's Estee Lauder. I think it trades also in Europe. I'm not sure under which symbol. Obviously, it's not a dual stock. This Estee Lauder symbol trades only in the US, and so big gap up. So that's the signal. Of course, it's not big enough to be a dominant stock on the gainers losers list. It appears later after this move from the 68 or 69 to over 70 or 71. Now the question is, when do you observe the stock? Do you observe it at the break of 71? Do you observe it at the break of 70? Or do you observe it maybe here at the highs of the day, which are this consolidation at 72, 72.50? Again, with the help of round numbers, and again, the VWAP is not in play because the move higher is very, very strong. Sometimes you may have the time to look and check out what's going on. Why is it the stock up? Is it an upgrade? Is it any other super important intraday news? Because obviously it's not an earnings call. So let's take a look at this support level, which again is a round number, 72. So the stock moves to 73.50 at one point, above 73, pulls back. Obviously, buying this breakout here, I don't think fits anybody's strategy. It's too extended. You don't have a clear stop loss. You want to see a pullback, and this is the first pullback, and we're talking about 11 a.m., the first pullback in the stock. Now, it's also a pullback to the round number. Again, using the round number strategy, can you buy close the round number? The answer is yes, but you have to be 100% focused on the stock during these 10 minutes. Is it feasible? Again, as opposed to SATS, which gave a base and it was a more trivial trade, this one needs a lot of attention, a lot of focus here to be able to enter the trade at 72 or 5 or 10 or 15 and use a couple of cents, or again here 70 cents is out of reach, and there is no reason, because if you look at 72, where is the stop loss? There is no stop loss. I mean, the stop loss can be everywhere. So you either take a very little risk, or you buy it above 72 and put your stop loss under 72, and it works. How feasible, like I asked before, is this trade? I don't want to say highly unlikely, because then immediately someone will say, I was focusing and then I took the trade. Keep in mind, you cannot be focusing on Estee Lauder when you have, I don't know, at least 20 to 30 other potential trade candidates at the same time. So again, if you focus and you do the job, it does the job for you. Again, the logic is the round number, and the continuation play, and indeed the beautiful thing is it closes at the highs of the day. So in terms of risk reward, again, amazing. In terms of feasibility of the trade, a bit tough. So that's 5 minutes with Estee Lauder. Let's move to the third candidate. I won't be able to finish 4 because we have the 15 minute limit from YouTube. Let's take a look at Roku, another stock that we actually talked in the pre-market. So what's going on with Roku? Up again, huge gap up, and everybody saw this gap up. Why the gap up? A cooperation with Amazon in selling ads. So they're selling ads with Amazon. I don't care what it means. I know that the stock is up. It's immediately on our radar. It's an important stock for the media. Very volatile, a bit spready, up in this case almost 9 or 10%. So what happens? Basically nothing. It's impossible to trade until after 11. So if you think about trading this environment, I have to say super tough. Then patience comes in, and you have to wait, guys. Take a look, and again, look at the importance of the round number. And this is the round number of round numbers. So it's not 85, it's 80. So the stock base is here for almost 3 hours at 80, and then goes from 80 to 82. Now, how feasible is this trade again? If you're not giving up on Roku, and I think many people gave up on the stock, you're getting paid. And if you give up or think about shorting it for whatever reason, because the trend is clearly lower, then you pay the price or some price. If we're looking at the pattern, it's similar to the pattern that we've seen in SATS. So the stock cannot do anything at the highs. It needs to pull back, create a base, and this time the good thing about Roku, that's why I'm pointing you to this stock, is that the base is a 3-hour base or a 2.5 hours base. So it's not like you can miss it. So you're looking, and the stock is sitting here. Now, if you try it prematurely, so you enter at 80 here at after 1 p.m. And it pulls back a couple of cents under, and you're not keen on the stop loss, and your stop loss is exactly a couple of cents under 80, so you stop out, and you lose a couple of cents. And if you try it again the second time, you get on a 20-cent risk a 10-to-1 risk reward. So that's the payoff of trading Roku or trading SATS. So you are drawn to the stock because it's a huge winner. Then it disappoints, and then you have to wait hours. Is it worth it to wait hours to get this type of a move? I think it's worth it. Again, it works sometimes against our psychology. Sometimes we trade a lot in the morning. We don't have the energy to stay late. But I think if you look in retrospect, this is an easy trade once it gets going, and then the result is amazing. Okay, guys, I won't have time to show you the last one. Check it out yourself. QUBT. Thanks also for being here with us. Please share this video with your fellow day traders, and we'll see you in our next educational video.